Get going. Cynthia told you all about Xendoo. We're here in Fort Lauderdale. We're off on I-95 in Cypress Creek, and we're about 45 team members strong, and we're all in office under one roof. We believe in swivel chair collaboration, and with the way that the world has transformed into a digital world, and there's integrations with accounting and all those things, we like to have our team members in office being able to help each other out. And we believe in providing data-driven insights for small business owners. So let's talk about, what are common ways to vet a CPA? So I'm going to touch on accounting and CPA. So there's two processes to the year for your book. So you should be doing monthly financials, right? Because you want to see, that's kind of your health scorecard or checkup each month to maximize how profitable you are, that you're looking for things on your income statement, also known as a profit and loss statement. You're looking for things that you can do better at, right? Maybe can you lower your cost of goods? Can you increase your net income? Can you increase your gross margin? And your P&L or income statement is going to show you those things on a monthly level, and that's accounting. Then at the end of the year, you need a CPA to file your taxes, your federal tax return, as well as some states have a state return. Florida, we don't have to file state taxes, but we still file a state return. So a couple of questions to help you vet a CPA. You want to know how many years have they been in business. That's going to help you to understand their level of experience and how much they know about small business. Or another way to ask that is, how many tax returns do you file a year for business owners? And there's a difference from filing a tax return personally versus business, because there's a lot of opportunities, and we're going to talk about it in a few slides from here, of tax savings for businesses, that if a CPA primarily is doing personal returns and once in a while doing a business return, they may not be as up on all of these opportunities. The second piece is, you want to know how familiar they are with your industry. If you're an e-com person, you absolutely want to have a CPA doing your tax return that does e-com businesses. If you're in the professional services business, same thing. You want to know that they have other people in a similar like business as yourself to maximize the tax savings. And then an easy question is, how much are your corporate tax return pricing? So our corporate tax returns are $1,200. And typically the market is $1,500 to $2,000. I recently spoke with somebody that's out of New York, and they're paying their CPA $10,000 a year for the tax return. And we took a look at the tax return, and for us, it would be an $1,850 return. So the pricing's all over the place. Ask how much they're charging for the return. Okay. Next step, let's go into overlooked tax deductions, some common tax deductions that we see small business owners overlook. Now, we work with approximately 1,200 small business owners across 48 states and 13 countries. And so we have a wide audience of people, and what we, from talking to them, what we see that they don't think about that are great tax deductions for them. One, home office. Even if you have a physical location, you should be claiming the home office deduction, which is a $1,500 deduction. Definitely you want to take that. Again, even with a physical office, you take that because you do work at home. Second area that we see people overlook commonly that we have to ask them, travel expenses. If you're traveling for work, you may think, oh, I'm taking a family vacation to Colorado, but you're tying in meeting with a client, or you're tying in a one-day seminar. So they will not claim any of that travel expense, and they need to. So that's an area we see, but people miss out on that. And then if you're a business that buys CapEx, in other words, you have equipment, maybe you're a manufacturing business, or you're a pizza shop, and pizza ovens run $50,000 or so. You want any large purchases, you want to do Section 179. Now, in order to take advantage of Section 179 on your tax return, business tax return, the business has to be profitable. So if you're profitable, you want to take advantage of Section 179, it's going to lower how much money you have to pay IRS. It actually allows you to take that tax deduction and money you would have been paying IRS, you can now use to reinvest in your business. And then how do you maximize your tax savings? So what are some ways that you're missing out, different than the deductions, but that you may be missing out on at the end of the year or throughout the year. So personal expenses, lots of times we see, people that have just spun up a business and they're in their first year or second year, they're spending out of pocket and they're not capturing that monthly. They think they're going to capture it at the end of the year. And if you're not capturing it monthly, and what I mean by that is every business absolutely should have a business bank account and a business credit card. And then there may be times that if you're say you're a contractor, general contractor, and you're at Home Depot and you need to make a purchase and it's $1,500 and you don't have the business credit card because you gave it to one of your guys to go buy something, and now you put it on your personal card. And if you don't capture that monthly, chances are by the end of the year, you don't remember all of those expenses. And now it's not captured as a write-off, and it absolutely should be a write-off. So we highly recommend that anything that you're paying for out of your personal, that you move that into the business and that you get reimbursed for that, but it also has to be captured as a deduction. If you just take a check out of the business and you don't capture it as a deduction, it's going to end up being classified as an owner distribution. And so you didn't enjoy the benefit of writing that off. Augusta rule, most people don't talk about the Augusta rule. It is something hidden in the tax code. And what the Augusta rule is that your business can pay to use your personal home up to 14 times for the year. So imagine this. You need to have a meeting, half a dozen people. You tell them, come on over, we'll sit on the back patio and chat. Well, if your local Marriott charges $800 for a meeting room for a half day, you can write a check from the business to yourself. It is an expense from the business, and you do not have to claim it as personal income at all. And you can do that 14 times a year. So if it's $500, that means $7,000 you took from the business paid you tax-free. It's a tax expense on the business, tax-free to you on personal. And just document it, document what the meeting was and who was there. And then the third piece is S election. So what S election means is that if you are a single member LLC, if you don't claim an S election and your end of year return, tax return, will be it'll be a 1040 Schedule C. In other words, your business income will go onto a one page in the tax return, profit and loss, and balance sheet will go in there. And you'll lose out on the deduction you could have. So say your business made $100,000 for easy numbers. It made $100,000 of net profit. And so on your tax return, that's going to say that you made $100,000. Well, you're now going to pay both sides of Social Security as an employer and as an employee, and that's 15.3%. Whereas if you would have taken an S election, which is a form 2553, that is form 2553, where you take your LLC and you say, I want the S election, you will now become a separate tax return. So you'll file an 1120S and your personal return, right? But you're going to save a lot of money. So then you say you take $40,000 as your salary. You'll still take the 60,000, but you won't, on the 60,000, you won't pay 0.0765 for the employer side of Social Security. So think about it. If your business is making 150, you're going to save $9,000, $10,000. So yes, it's going to cost you one more return, $1,200, but you're going to net save a lot of money. So S election is important once you have a business that has more than $30,000 in profit. As a single member LLC, we always recommend to go to an S election. And then lastly, we'll talk about some financial health tips. And the difference from tax savings and financial health tips are really, the health tips are things that you should do throughout the year, right? How do you think about your books and having visibility to how strong your business is? Because if you know where you stand throughout the year with your financial strength, that gives you the opportunities that if a supplier says, hey, we have some closeout merchandise, do you want to buy it? If you know where you stand cash flow wise and profitability wise and what kind of tax, that you may need to pay for the quarter, you're going to be able to make those decisions and take advantage of those opportunities. So one, we highly recommend monthly financials, whether you're doing them yourself or you're having a provider do them, such as us, we do them for you. Very important to do your monthly financials. I always recommend to business owners that you have a check and balance system. So if you have an internal bookkeeper doing your financials, they should not be also giving you the P&L. You should be going in and pulling your own P&L. Or if you have somebody internally that's paying your bills, collecting money and doing all that, you should have an outside provider such as ourselves or somebody that's going to do your outside accounting for you. It's very important to have that checks and balance system. 50% of all small business owners are embezzled. Not only that, people that aren't college educated in accounting, degreed in accounting, they're not going to know all the ways that your business can save money and to make sure that your balance sheet is up to date for you. So monthly financials, absolute must. If you're doing them yourself, we do at Xendoo have a product that is $30 a month that you can connect your QuickBooks Online or your Xero, and we'll tell you if there's any kind of errors in your books, like statement mismatch or negative balances or things like that. And you can reach out at the end. We'll give you an email that you can reach out to. Tax planning in Q4. We see it over and over and over that people do their tax planning in January or February for last year. You missed it. Don't do it then. You want to do tax planning early Q4. So beginning of October, you want to say, how much money have I made for the year? How can I invest in my business to use the money I made to minimize how much I'm going to pay Uncle Sam so I can reinvest in the business, buy equipment if I need it, or do the things that I need to do in my business. So highly recommend early Q4. If you don't do it early Q4, do not get past the middle of December because you'll miss critical tax benefits that you can have. Number 3, document your major purchases. What I mean by that, you buy a pizza oven, you buy something, you're a dentist, and you buy, a great new piece of equipment that's $75,000. You want to take that documentation for that, the closing agreement, the sale agreement, the lease agreement, whatever it may be, and you want to put that either digitally or through an analog, just in the old-fashioned file folder. And you want that in the file folder, and you want to make sure that those things get on your balance sheet so then that way they can be depreciated over time and can be utilized to maximize your write-offs. So a couple critical areas for that. At the end of it it's all about how do you save money on taxes, right? People say to me, well, there's such a cost to doing my books monthly. And, for us, it starts at $5,000 a year, right? $395 a month is the minimum. And sometimes it can get up to $1,000 a month or even $1,500 or $2,000 a month. The way that I've always looked at my businesses before I was in accounting, so I'm not an accountant or CPA, just really want to level set the playing field for business owners to maximize the write-offs. But the way that I've always looked at it at accounting, between my accounting and my tax return, is that it shouldn't exceed more than 1% of my total revenue. So if you're at $1 million in top line revenue, then budgeted should be $10,000 to do your monthly bookkeeping and including your annual tax return. And if done properly, there will be an ROI on that investment that you have because it's going to allow you to be more profitable because you have the visibility. It's going to allow you to have clean books when you want to go out and get a line of credit or to be prepared. You go for a loan, they want last 2 years tax returns and 3 months of P&Ls. If you don't keep up with it as you go, and then you make a phone call to whoever's doing your taxes, they're going to tell you they can't have it for months because they have to do catch up. So great way to have the stability in your business is to have the monthly financials and to be able to maximize tax savings and look at it as an investment and not an expense. And with that, I want to say thank you. I think we are 17 minutes in, and Cynthia, thank you so much. Happy if there's a couple of questions to answer a couple of questions.
Absolutely.
Yep,
Yeah.
absolutely. Sales at Xendoo is our email to reach out if you want, or go to our website, schedule a free consult. Let us know that you heard it on Better Business Bureau webinar. And I wish everyone a super successful new year. And I'll be happy to answer those couple of questions that I see there.
Okay, so I have a question here. When is a good time to change to an S corp?
So a good time to do it as soon as you can. There's a limit to it. You're supposed to do it in the first 3 months that you become a business, but we file a selection for people all the time, long after. They could be 2 years in. Uh, you want to file it, there's a possibility, I'd have to ask Lewis, our director of tax, there's a possibility you can still file in January for the prior year, but you want to file for
Okay.
that.
The other question we have is when should I hire a bookkeeper for my business? When it's tax time or right now? When is the good time?
Oh, definitely in January. 25% of small business owners are behind on their books. So number one, you're not alone, and don't feel bad, because doing books is kind of like vaporware, ether, and it's not like that problem in front of you, like a team member called out today, or you need to hire 3 people. The books are kind of like they're not front and center to you. So people let it go, and they blink and it's like, oh my God, it's already June. I meant to do that in January.
Yeah.
So let's talk about when's the right time for you as a business. So I look at businesses that they sell 2 things. At the highest level, they sell 2 things. They either sell time or they sell a product, right? If you sell time, you're classified as professional services. And if you sell time, your gross margin should be somewhere around 50%. And so if you're at 300,000, 250,000 in revenue, then it's worth it to make the investment, because you need that time to sell more time to your customers. And so by paying, typically people who sell time at $100 an hour. So if you're paying $395 a month at a base level for your accounting, that's 2-3 hours of your time you're getting back, and doing your books normally takes 5 to 7 hours a month. If you're selling a product, we say to people, where we come in is really 500,000 and above. If somebody calls us and they're selling a product and they're just getting going and money is tight, we'll give them a way to do it in a spreadsheet, or we'll give them tips about, just open up a zero account, get started on your own. And when you hit that 500,000 threshold, come see us. We can certainly do your tax return for you long before that, but come see us for monthly bookkeeping. And what you're doing is you're just delegating so you can get your time back to spend it on focusing on growing your business. Great questions.
Okay. We have another question. What do you recommend small businesses can do to preserve their cash flow?
A couple of things. I'm really passionate about this. So, number one, do not give people credit terms. Like, that ship has sailed way long ago. So I see, legacy businesses that have been in business for 8 years, 10 years, hanging on to practices of how business worked in that time frame. It is an investment for you to make the digital transformation in your business, and it is an investment that must be made of your time and maybe some money to be part of the new world. Critical. So don't give people terms. The public is used to paying by credit card. They're used to paying up front. They're used to paying when product is delivered. So one, that's how you handle your cash. Second thing that I see where people will overbuy inventory and they'll sit on too much inventory, and they think that that green refrigerator is going to come back to popularity. Write off your bad inventory, donate your bad inventory, give away your bad inventory. Whatever you need to do, get your bad inventory away. So one tax write-off at the end of the year is to take dead inventory and expense it out. So take that as a write-off, or donate it to a local church or a school or whatever the case may be. So 2 big things: your cash flow, cash is king. 82% of small business owners that fail because they ran out of cash, not because they weren't profitable. So what I mean by that, Cynthia,
Mhm.
is that Somebody that it does not have visibility, they're only running their business from how much money is in the bank, and they're not taking into consideration, do I owe people money? Do I have payables? And all of a sudden the music stops and there's no chair. It's because they ran out of cash, but they didn't even know that their business was profitable and they were so close to the top of the mountain and they turned away. So you have to understand how much cash is oxygen to a business. You have to understand how much cash does my business need? So now here I'm saying, make sure all your customers pay you no terms. But if you have terms with a provider, and you're running into cash problems, ask them for 45 days instead of 30, right? Manufacturers are used to doing business that way. They're big, they're multi-million dollar businesses. You're a small business, you're less than, small business is classified really as less than 500 employees is how the government classifies small business. I classify it as if you're less than 50 employees. If you're less than 50 employees, you're truly a small business. And if you're 5 to 10 employees, like you're early in the journey and you need to hang on to your cash. You need to really plan out how much do you need? Is your business cyclical? And what are the things that you need to do? Have a credit line with a local bank and don't go out on it frivolously. Go out on it when you need it and make sure you clear it. So I'm sorry, super passionate about it because
No,
I
no,
see
no, no. That's
businesses go
great
out that,
tidbits.
yeah,
Yeah.
that
And
shouldn't
that's
go
how
out.
we classify small business here at BBB as well. I think 500 is a huge threshold. So I think, 50 and below, you're really small. And if you get to 10, that's micro and you need to preserve. I have a question from myself, and I had the opportunity to work with Xendoo, and this is not our first presentation, but I want you to just tell the audience, how does Xendoo stand out from the competition? There's a ton of CPAs or tax preparers or different people that deal with taxes, but just, tell us in your words, Lil, how does Xendoo stand out?
Thank you. We speak small business. We bleed small business. We love small business. The difference is this, the traditional industry, and there's a lot of wonderful, great, fine people in traditional industry, but the traditional industry does not understand the life of small business because they understand their business, right? CPAs understand their business that, from January to April, they don't have a life. And then after that, they disappear. And I'm sure all business owners feel this because this is what was the impetus for me to get into this industry and to bring technology to it. And the reason being is I would call my CPA and I'd get an IRS notice because the IRS can send you a notice for anything, and they send you a notice. And it's churning away in my head when I was in manufacturing. Oh my God, I got that notice. They're saying I owe this money. How can that be? Blah, blah, blah. I'm calling my CPA. No answer, no answer, no answer. Finally, 2 weeks later, after you call and call and call, then your CPA goes, what's that form number? Oh, don't worry about it. That's nothing. And you're like, oh my God, my head's exploding. Could you have just told me that 2 weeks ago? So the difference between Xendoo and the traditional industry is that we have empowered our team with technology. So when they come to work, they don't feel overwhelmed and feel like they're, climbing a mountain. They feel like they're running downhill because everything's in front of them. They know which customers are supposed to talk to that day. They have all the tools that they need that does an extra check on quality for them. They have all the communication. Our customers have a mobile app and a desktop portal that they can set up a meeting with their accountant. They can send an email. They can click and dial them. And so the difference of us to the traditional industry is that one, we care deeply. Every team member in our business, if you look at our social media, you will see an organization that cares for each other and cares for our customers. And we understand small business owners are, changing the world. They're the ones that are helping their communities and educating their team members and providing stability. And so I think there's a big difference between us and the general industry.
Yeah. Well, thank you so
Thank
much
you.
for that, Lil. It's always a pleasure to hear you speak. I learned so much. I'm not a business owner, but if I were, this knowledge is just so rich, and it's given in digestible terms, because taxes and anything that has to do with it can be daunting for anybody, right? So thank you so much for your time.
Thank
It's
you.
always a pleasure, and we will be sharing this in all of our channels. And until the next time, and thank you so much to those that are listening from their office or from home.
Thank you so much. Thank you, Cynthia. And please reach out with questions. We're here to help. Thanks so much.
Absolutely.
Bye.
Thank you. Bye bye.